So for banks, sure. I mean, the advantage of digital assets is you can bring new assets on chain to, give credit to. And that's a lucrative business. I mean, that's what banks do fundamentally. Take in deposits, lend out money.
Welcome to another very, very exciting AssetRush talk. I'm here today with Richard from Fireblocks, and we will hear so much new things about crypto, Web3, and everything which has happened in the world. So Richard, very, very warm welcome from my side.
Thank you very much for having me here. It's a pleasure.
Richard, we would love to get to know you a little bit better. So who is Richard?
Let's see. Maybe a traditional, finance background, but I took the leap into crypto and digital assets about 5 years ago. Been involved in a couple of startups in Crypto Valley, and then was actually a customer of Fireblocks before eventually joining them full time. So I lead the Swiss market for the company, and also a little bit looking towards the Middle East as well, which is a future growth market for us. And it's been a really, sort of crazy journey. I think particularly where we look at the environment now. Another sort of crypto winter heading our way, and actually being based in Switzerland is quite interesting because we've been through this cycle, a few times now, and the industry here in particular comes out stronger, and Fireblocks are certainly going to be we're in a very strong financial position as well to make sure that we can get ourselves ready for that next phase of growth.
Yeah, no, fantastic. But is there something, Richard, people might not know about you? So that was your very, very professional. So what is really driving you in terms of why you love startups, why you are where you are right now? Is there something where you say, oh, this maybe other people wouldn't expect?
I think what really got me into startups in the first place was, I was working at Citibank, which is a really great place to work, but it is a huge, huge machine. And if you're generally in your life are inquisitive and you want to find new ways of doing things and innovate, you want to be able to see those through. And when you move, if you're in a big sort of organization like Citi, you sort of might come up with like the best new idea, and then it gets filtered through a system that by the time it comes back to you, it's almost like this completely warped version of the original idea, and actually probably doesn't actually do what it is intended to do. The interesting thing about getting to startups, what really got my interest was working at Citi. It's a huge machine, and when you come up with innovative ideas that might benefit the bank in the long run, they get passed through this sort of filter system, and by the time they actually come back through the big machine, they're a completely different version of what you imagined. And really with a startup, you tend to be a lot more more lean. If you come up with a great idea and you're with a founding team that support that sort of growth from the internal team members and their contribution, you execute. You come up with the idea, you come up with a business plan, you find a way to execute, and then you deliver it. So, not only is it interesting from like a dynamic work perspective, it's from a personal growth. I mean, you're on a huge trajectory. So I think in the 5 years since leaving traditional finance, what it's done for me, not just professionally, but also like in personal life, the growth that you go through has just been incredible. So I recommend it to others, but don't get me wrong, it is not a rosy street by any means.
No, I would say I have similar experience. I also have been with big incumbents and startup experience, but I love the startup, and I was very fortunate because at UBS I was in a startup, basically creating a startup myself within a big incumbent. That is very, very special and not the normal one. So, but I can absolutely sympathize with what you do and how you describe it and what the mood is. And as you say, it's not always rosy. So what were the real difficult moments where you thought, oh my God, why did I ever go this way?
Yeah, it's a good question. I mean, besides the huge cut in your income that you're going to take,
but you are a shareholder.
Of course, yeah. I think that's extremely important across startup companies, that employees are part of the growth. They can share the successes as well as the challenging times.
It's the pain and the gain.
It is, yeah, and it's I think when you go into the startup world, it is very rosy because there's a lot of things that you can get out of it, and there's a lot of things that you can give into a new organization that you might not have got elsewhere. But it's long hours. It's a job that you have to live and breathe. So the hours that you put in for less reward initially, and then maybe you'll make it into that sort of that 5% or less that, you know, that actually get to a point where you might see a liquidity for all that work, you know, whether it's public offering, maybe it's an acquisition, or maybe you just grow into a developed business that generates you know, cash flows that can then be paid out to shareholders. It's that bit is a marathon, it's not a sprint, and I think people who get into it for the wrong reasons are quickly found out, particularly now, because there's a lot of really interesting talent that are, you know, sort of shunning this sort of big engine type businesses, the steady, the stable jobs. They're actually shunning that in favor of the startup environment just because they see what they can gain from it from a personal perspective. And that has been trumping, you know, big salaries across the board, particularly for those who are coming out of top universities. You know, they're looking towards startups now, which I think is amazing for where it could take, you know, finance, but also other elements of what things like digital assets can bring to other parts of the
I think
industries.
it's a digital asset space, but apart from that is more also about the mindset and the culture. Yeah, we also see that obviously at AssetRush and Gen 2. It's a very, very different culture, and people come here for the love and the care and the passion they have. I can feel that's the same also for you. I've seen yesterday there was big news a couple of days ago about JP Morgan spending trillions now into DeFi. Yeah? And interesting enough, Fireblocks was mentioned also as one of the companies already doing it next to Aave. So not everyone is so familiar perhaps with Fireblocks. It's not the fire which everyone sees. So what is it really you do with Fireblocks, and what is it, the pain point, so to speak, you solve with Fireblocks?
So back in, I think it was 2018, Michael and the founding team was sort of conducting their market research. Actually, when I first met them, I was actually part of a different custody project back in 2018. And I met Michael back then, and they were doing the market research amongst sort of key players in the market making space, the brokerage space, and trying to understand, you know, what were these pain points. And actually what they realized, you know, were that people didn't actually have a wallet problem, as in a custody problem. They have secure wallets, okay? What they realized with the problem was they actually had a problem transferring assets and doing that in a scalable manner. So Fireblocks fundamentally, yes, we have a basis of a wallet infrastructure. So the ability for customers to take custody of digital assets. But really what's differentiated us is the fact that we're enabling customers to be able to securely transact with those assets. So transfer them and or interact with the blockchain. Whether
So
it be
who
through
would be, you explain that perhaps tomorrow anyway in 5 minutes, but if you explain it to your kids actually what you do, so how would you explain it? What is what you do and with whom you transact?
Explain it to a child. How really well do you know your business, right? Like for children, it's a medium to be able to take direct holding and custody of your own assets, and then the ability to send them to someone else. So if I want to send you digital assets, I use Fireblocks. You can receive them as well using Fireblocks. You can also do it in an extremely secure and simple way. And I think that's one of the things that often gets overlooked, or what puts people off with crypto assets in particular, which by nature are bearer assets. Even still, I'm used to using MetaMask wallets and ledgers and things like that. But it's and you make an error, the assets are gone. You can't call your bank and just say, oh, sorry, sent the wrong money to someone. They're gone, and potentially for forever and irrecoverable. So that is quite scary for even people who are used to dealing with it. So you need to take that piece away. So I think we could actually give it to a child to use. I think that's probably the interesting thing, is that even a child could use Fireblocks.
I would even think that children are much more advanced than the two of us. Because they play Roblox and they play other games, and in the games they already know digital assets.
Yeah.
Now they have the NFT. We are still wondering what this is all good for, but they have absolutely no problem. And as you know, they also have the normal currency, but that will change. Yeah. So in terms of the crypto, let's say also waves we have now, you mentioned the crypto winter, which is a little bit of a nightmare, I also would think, for clients. So do you feel that now that people come to you and say, nice what you do, guys, but in the long term, I don't think that we will have crypto or digital currencies at all?
No, that is a fundamental difference, I think, to where if we look back maybe 2 cycles ago, looking at the 2018 crypto winter, back then it was people were leaving the market. They were questioning, is it actually going to be a thing? Will digital assets take off? What's tokenization? I think that's completely different in this particular market. New entrants are still coming to the space. It's going to be really challenging for new startup companies. Having said that, when you speak to venture capital firms, they actually revert to still investing in early stage startups. It's more the late stage actually that take the hit. Fireblocks, as publicly, we're extremely well funded. So we did numerous funding rounds last year, potentially in preparation for what may have been coming this year.
One of the opportunities eventually for you tomorrow also to attract new investors as a startup was your idea?
Not really to attract new investors. We've got a very good, solid investor base from leading VC firms around the world. I think it's actually helpful for customers, I think, who are raising capital. Understand what we do, but also are using our technology, because really what Fireblocks is providing them with is basically a secure means of holding and transferring crypto assets, or digital assets, I should say. So for them, it's actually reassuring to investors they've got proper governance in place, particularly if they are mixing equity raisers with potentially token incentive schemes as well, because... So
the classic client, is it a bank or is it an intermediary, or how would you describe it?
The classic client is quite diverse. In fact, I think what Fireblocks is, what we've seen from the customer base, we actually have customers operating in every single digital asset segment there is. So we have market makers, brokers, there are traditional banks in there, Bank of New York Mellon, I think everyone knows, but also we have a tremendous amount of companies that are building in the world of Web3, so whether that be around decentralized finance, gaming, NFTs, we have tokenization use cases, payment service is going to be an enormous part of our business going forward. And so for us, we've been able to sort of take this basis of wallet infrastructure, give it to customers, make it very developer friendly, and then all these businesses that have been built on top of Fireblocks, has seen our company grow, to an extreme event,
that's
really.
Super exciting. So I'm actually not surprised that JP Morgan also enters the market now in DeFi, because, as you say, it will be just the future. Yeah. And I also would agree with you what you said, that this is not yet another crypto blush where then everyone runs away. So from everything I know in the market and what you describe, I would also agree very much with the statement that this is not going away. DeFi is the next business model for banks as well. There is, yeah, and even like super early on, before DeFi was really a thing, it was the banks were super interesting. Like we've always had good relationships with banks. They're not all piling in tomorrow. Don't get me wrong. We serve the lion's share of crypto, what we would call crypto native business, but we have a large number of banks and regulated financial institutions that use Fireblocks. And you talk about this very plain vanilla stuff, like how can a bank custody Bitcoin, but there was always a portion of time at the end of each call to say, like, all right, tell us about DeFi. That really picked banks' brains, because it does streamline a lot of processes that have been filled via intermediaries, and having a more direct relationship, and also relying on smart contracts to enforce financial products. So, and you could even challenge, if you don't need intermediaries anymore, do you need banks? I think you always need banks, yeah. Yeah. It's come from banking, you would
definitely
say
always need banks. No, I think there is, you don't want to see, and maybe what will come out of this crypto winter is a much greater focus on regulation. Regulation is not a bad thing by any means, but what I hope does not happen is that you try to over-regulate because of a few sort of events that affects the innovation that comes out of the crypto native. So as I said, a lion's share of our business, or a good portion of our business, we see not in terms of revenue numbers but in client numbers, is coming from crypto native. That's where all the innovation is coming from. So that innovation is then filtering through the field. So when banks are looking into DeFi, That's why we can present, such an amazing product to them that allows them to leverage, the technology, that innovation that's come out of crypto native, but then also apply, regulated tools, proper governance, security, know your transaction, things like that into the process so it fits there.
That's a very interesting point, because whilst banks might not be as fond of Bitcoin or other stuff, they definitely want DeFi. So to go there, you use the use cases, the technology, blockchain, smart contracts, which we know from crypto native.
Yeah, they could expose a whole new range of business models that is built on DeFi. But to be honest, for the end user, the end customer of the bank, it shouldn't really be too much different. It's actually what's, DeFi, it's like DeFi in the back end and a greater user experience in the front end.
Yeah, he shouldn't even bother about if it's DeFi or whatever it's called. Yeah, so
exactly.
For him it's irrelevant, so to speak. So innovation is really very, very strong in crypto native, you mentioned, and that drives also the financial services. You mentioned gaming as well. We talked a little bit about Roblox and the experience there and how easy it is, not only for children, also now we have other games. We mentioned Web3. So what's your view on the metaverse?
So the metaverse, it's quite a tenuous topic, really. I think it's still what's interesting from the metaverse perspective or NFTs is, if you look at Bitcoin, that's been around for 12 years or so, we're still determining where it fits, if it fits. Will it still be here in 10 years? We're not quite sure. No one can predict the future, of course. But then you have NFTs that have been really around for less than 2 years. And in those 2 years, you've basically got every major brand, bank from every different industry and asset segment who are investing in NFTs. So it's like, oh, we struck a chord here. We get this digital asset thing now.
I think it makes it more tangible, because if you do NFT art, then people can relate to that.
You relate to the physical.
If you do something like Bitcoin is all, and it is so volatile, so it's not tangible, but art is very, very tangible.
Yeah.
That's probably, as you say,
it made it simple to understand.
And you strike a chord and then everything goes. So the digital assets space and also what you have in custody, would NFT also be part of this anywhere? Yeah,
so we've just released a Web3 engine that basically allows it's basically a developer-friendly software development kit to build Web3 on top of Fireblocks, whether it's DeFi, NFTs, or gaming. So that's making it easier for the sort of the technical team to work on it. But then you sort of need to filter that through the rest of the bank. It needs to go through compliance. They need to understand it. It needs to go to front office. How do they sell it and position it? So I think the NFTs, as you're right, it struck a chord because people understood it. Like, oh yeah, we get it now. You have a token, you have a piece of artwork. The token represents the artwork in a digital format, but also potentially a link to the ownership of that piece as well. And you can transfer both together. That sort of struck a chord, I think, quite simply with people. And when you look at the metaverse, if we just say, look, it's the digital version of what we're doing today. Instead of it's you and I, we've got digital avatars, basically doing this for us.
Not only avatars, perhaps digital twins.
We could also have a punk on the background here, right?
And we could have a board 8. Where is the board 8? Right? We'll have to speak to Philip to make this a little bit more artistic.
Maybe we do
talk.
Metaverse in metaverse interviews.
You will not be surprised, perhaps, but we did a metaverse party with clients, and we obviously missed you there a couple of months ago, where we indeed had our party in the metaverse for the clients and were experiencing.
I still prefer the taste of a real beer at the moment.
Not yet.
No. Well, just water.
So we talked a little bit about the future. We talked a little bit about you, but where would you see? I mean, I give you this crystal ball. Let's assume, yeah. So what would you say in the next 10 years, from your point of view? What will happen?
That's a long time. A lot can happen in that time. There'll probably be another few market cycles to go through in the next 10 years. But certainly, if we look even in different sort of segments, you've got the traditional finance segment, which is certainly very much committed to the tokenization, digital assets, real securities on chain, whether it be bonds, structured products, equity potentially. That's going to continue to be their focus, because that, let's face it, makes up probably 99% of their business. Crypto, if they introduced it would be maybe 1%. So
it's very interesting. It's a 1 trillion market, the crypto market for wealth managers. So they should not overlook it. It's 1 or 2%, as you say, of the total asset under management size, but it's a huge opportunity. And right now, wealth managers are not yet on top of that. It's all the other companies who do. So there's really a question, when are banks going to move?
It is, yeah. I think with the digital asset use cases, like outside of crypto, it allows them to introduce it later if they choose. Otherwise, they can rely on business who are solely focused on that. You can outsource some of this. I think they're probably going to want to take custody of the assets themselves, but in terms of outsourcing trading, maybe borrowing, lending, things like that, maybe they'll look to the the digitally native crypto banks and broker dealers that that are springing up across the globe before they need to bring that in-house.
I've seen crypto whales buying property in the US with crypto, because obviously they don't have much cash. And there are already banks also accommodating for that. So we see quite a lot of development.
Banks make so much money from lending, so if they can take in crypto as collateral, they can manage the risk on that collateral, as in they can liquidate it.
They're even taking Bored Apes, by the way.
Excuse me?
They're even taking the Bored Apes.
I know,
yeah. There was a 8 to 9 million loan given for some Bored Apes.
I think it was Genesis, was it? Was it Genesis Capital that did that? Yeah, they're but this is a feature of digital assets, right? If you look at the Aave, the lending pools, it's quite a simple thing to understand. You've got a smart contract at the back. We'll leave that. But if I want to put my assets up for collateral, and it might not be a property, it could be a piece of digital art, like a Bored Ape, and then you're willing to accept that as collateral in order to allow someone to borrow from it, then we can derive an interest rate, and then we can rely on a smart contract to enforce the terms of that financial transaction. So for banks, sure. I mean, the advantage of digital assets is you can bring new assets on chain to give credit to, and that's a lucrative business. I mean, that's what banks do fundamentally: take in deposits, lend out money.
Yeah, so we are so fortunate actually to live in these times where you have this huge abundance of possibilities and opportunities, and we are now here in Switzerland. So you mentioned you are leading the Swiss team. So what makes Switzerland and its surroundings, apart from the mountains, the lake, what makes it so special for you?
So besides mountains, stunning weather, lakes, and generally a very nice place to live, from a business perspective, from a fintech or digital assets perspective, Switzerland has been a superb place to be and will continue to be. It's got crystal clear regulations and has done for many years now. I think it was 2015 they brought the first crypto regulation into Switzerland. And you've got an approachable regulator as well. So if you want to set up a new business, if it's not sort of potentially fitting the mold, you can have that conversation and they're engaged with you. That's made it a really good place for businesses to flourish. Because you have clarity, and I think we've got plenty of examples across the globe where there is no clarity, and that's causing a lot of frustration locally. It's causing businesses to leave and look elsewhere. Large companies considering actually moving their headquarters because they just can't continue to grow the way they are because they haven't got this clarity. So that was a huge thing for Switzerland. We sprung up some of the best crypto asset businesses across the globe out of Switzerland, and they've maintained solid, we'll say, business operations that have ridden through, good times and bad. And after all of that, we've got, current environment aside, if we look towards the end of last year, you've got all these big players now looking into Switzerland. FTX, there's BitMEX, there's Coinbase, there's many different businesses now coming to Switzerland and saying, this is a place we need to operate.
Which is very interesting, because sometimes when we live in Switzerland, and also when I talk to people, friends and so on, we totally underestimate the value which Switzerland offers, apart from what we mentioned for tourism, and it has so much innovation. And there's every year is a report coming out worldwide, and we are number one in innovation. Yeah. So how amazing is this?
It is amazing.
So we sometimes really don't get it. It seems we are, and Swiss people are usually also very humble, but I think we can all be very proud of what we have here. And you mentioned Crypto Valley and what you do, and all the big companies are now looking at this, even though maybe we only have 9 million, But nevertheless, this is a huge hub.
Yeah, you have to. I mean, you have to get yourself on the ground here to really see it. A few of the events that they do around, whether it be WEF or I think you have Crypto Finance Conference, Crypto Valley Conference, Point Zero. There's a lot of big events that are kicking off into Switzerland. People have got to come here and see it because it's. You're right. We're very conservative here. We kind of sit in between. If you look at sort of maybe the Asia region, which are very, very conservative and very softly sort of softly spoken about what they do, and then you have the American style, which is much more sort of like shout from the rooftops. We sit very much in we sit in the middle, and so you really have to get here, and that's what we said to the Fireblocks. The Fireblocks founders actually they came to Switzerland as part of their market research. Swisscom Ventures actually they were one of our first shareholders. So we've always had roots in Switzerland from the outset because we saw the opportunity that was going on here, and look where things are now.
So the future, if I may say, is really DeFi, Web3, crypto, digital assets, payments. Yeah. Absolutely. Mm-hmm. So money talks, money not in terms of cash, but in terms of payments. Payments are ruling the world, and we are in Switzerland. Yeah. So the best is always where we are today. It
is. Switzerland's interesting for payments because there's not a lot of actual credit in the payment system in Switzerland. So you could argue that is digital asset payments totally necessary here. I mean, when we use, we run around, we use Twint. It's, I can send money to you instantly. When we pay, it's directly debited from a bank account. So again, lucky being in Switzerland, but the minute you go cross-border into Europe, delays start. If it's in emerging market, frontier market countries, costs are huge. Time frames for receiving money from, from merchants or from service providers. If you look at like a Spotify or a Netflix collecting, so hundreds of millions of customers paying with credit cards across, in the Philippines or Africa.
And it takes hundreds of years.
Yeah, exactly. It costs time, and then there's also a time, of course, that which they as a business pay out to other, to creators, to artists. It's the knock-on effect there, and the bridge is credit. So that's a key area when you can do, almost peer-to-peer transactions. You can reduce a lot of those costs, headaches, and of course risk, which accumulate.
So we have a big transformative change in front of us in terms of the whole payment system in the world. And with that, I would really, really like to thank you, Richard, for all your amazing insights. And I wish you good luck with all the future ventures you have, in particular, obviously, Fireblocks, but also for you personally. Thanks for being here with us in Switzerland, and thanks to the audience for listening to us.
Thank you very much.